Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So over the previous 3 weeks, we went over some of the key indicators in the Trend Investor Pro Indicator Edge plugin. We started with breaking down the Trend Composite and how it works, looking at the individual indicators. We looked at Trend Composite signals. We looked at the Momentum Composite and the indicators behind that, as well as the signals. And today I've got 4 more indicators that I want to show you. RSI Trend Range, which is a trend following indicator, the moving average trend, which gives you the direction of a moving average, the percent above a moving average, simple moving average. So if you want to know how far is the 5-day moving average above the 200-day, you can use that indicator. And then the ATR Trailing Stop for trailing a stop loss, obviously using the average true range. The first indicator I want to show you is what I call RSI Trend Range. Now, I found that a little bit of smoothing can go a really long way. And so what I've done here is I've taken RSI and I've got 65 period RSI. That's 3 months. Because if you want a trend following indicator, you can't use a 14 period RSI. You can, but you're going to get a choppier version. You're going to get whipsaws. But if you extend that version, if you go to 3 months and then you smooth it with a 5-day moving average, and this is what this indicator is. It's 65-day RSI and it is smooth with a 5-day moving average. So if I go over to the upper left and I open up the chart settings, and then I will look at the individual settings here and click on that little icon there. And you can see 65 period RSI, 5-day smoothing. And then I put the upper reference at 51 because you got a long RSI, you got a little bit of smoothing. So above 51, you're in the upper half of that range. RSI goes from 0 to 100, and you're clearly in an upward trajectory when you're above 50. And when you go below 50, you're in a downward trajectory. You're going to get whipsaws. Those are going to happen. If you want to reduce whipsaws, you can do something like change that smoothing to 10 period. And you can see the chart changed right as I did that. And so I'll go back up and I'm going to put it on 1. And I want you to put your eyes on the RSI chart at the bottom. And I'm going to put that at 1 and watch it change. See how jagged it becomes? So if we smooth that out with a little moving average, we can remove some of those jagged edges and those whipsaws that are going to happen. So I'm going to close this and we're going to look at Ford. This is a longer term chart. It's going back to June 2018. And you can see it was in bear mode in the summer of 2018 all the way until the spring of 2019. And it got bullish for a while, then it got bearish again, and then it got a whipsaw, and then you can see it got bearish in late January 2020. So it was bearish before the COVID crash, and it avoided this big decline. And that's what these indicators can do for you. They can help you avoid these big declines, and that will save you in the long run. And also, you're going to catch some good trends. Now, you can see we got a trend signal here, but then we got a whipsaw right after it. And that's going to happen. But if you look at the next trend signal in July 2020, it was a dandy. And Ford just surged from 6 and something until 25. It outperformed Tesla during this period, believe it or not. And so now Ford is kind of teetering. It's right at the point where it's at its make or break level. And if I open up this chart here, we can put a couple of trend indicators or a couple of trend lines, I should say, and see what it looks like for Ford. But, you know, look at that sharp decline, a little bounce consolidation, and another decline. So maybe there's some resistance turning into support here, and maybe this evolves into some sort of a falling wedge. But right now, this gap is bearish, and Ford needs to get some sort of upthrust and breakout going here to hold support and to keep this indicator from turning bearish. So this indicator is the moving average trend. It's basically the direction of a moving average. Now, the red line is 125-day moving average, and I'm basically looking at the 5-day rate of change for that moving average. So when the 5-day rate of change is positive, that moving average is rising, and you can see it's clearly rising here from February last year all the way up until November, December. And you can see the 5-day rate of change is getting above 1% on a regular basis from February all the way until September. And when the 5-day rate of change for a 125-day moving average is above 1%, that means there is a steep advance underway and a strong uptrend. Now you can see that that 5-day rate of change started declining because the upward trajectory in the moving average started slowing. And then you can see here in late January, the moving average actually turned down as that rate of change turned negative. Then it turned back up, and then it's turning back down. And that's the way it is with these trend following indicators and moving averages. They're going to lag as far as trend following signals are concerned. But if you do get a good trend, you're going to catch a really good signal. Now you'll notice that I've got lines here at 0.3 and minus 0.3. And I'm going to go over to the upper left and I'm going to open up the dialog box there. And we're going to look at the settings here. And you can see 125-day moving average, simple. You can choose exponential. I personally prefer simple. You can adjust the rate of change. So if you want a slower, say, rate of change, a longer period of rate of change, you could use 10 or 15 or 20. But again, I put my personal preferences here. And then these upper and lower references are kind of like a filter, all right? It's to filter out some of the whipsaws. Now, of course, when you filter out whipsaws, that means you're going to be later to a signal. If I put the crosshair on here, you can see that we got below that minus 0.3 area in March 2020, and that was near the bottom. But that's the way it is with trend following indicators. And then we got above the 0.3 level in May 2020. And you can see that this has been a doozy of a signal. And so the moving averages started flattening out. And if you just look at price action, you can see since basically September that price has been flat. So this trend is what's losing its trend. We're basically in a trading range since September. And if you look down at the moving average trend indicator, it reflects that. It was negative, positive, and negative, but it is yet to cross below the filter threshold that I put. Now, is this a signal, so to speak, to buy or sell? Well, if you're running a trend following strategy with rules, then it could be part of a signal that you want to use. But I would also use other indicators in conjunction with that. In particular, I would look for when the trend is up, when the trend is strong, and then look for pullbacks using something like the momentum composite that I showed you last week. So if you're interested in any of these indicators, by the way, you can go to the bottom right. There is the plugin icon. And if you scroll down, there is the Trend Investor Pro Indicator Edge plugin. And you can click on that to learn more about all the indicators. And if I go over to the left, I can scroll down and there are the indicators that are available. The Trend Composite is just below Stoke Close. It's also on there. And speaking of the Trend Composite, I started a series on the Trend Composite indicator where I'm building into a strategy, and I released the first 3 parts of this series on Trend Investor Pro for subscribers. I go over the indicators, then I do an all signals test, and then I did some portfolio level testing where we went from 97 ETFs to trading 14. And I showed the backtest results for that. And we're going to further this with a momentum aspect, an ATR Trailing Stop. And then I'm going to show you how to use the Trend Investor Pro table that shows the trend signals and the momentum rankings. So this indicator is the percent above moving average. And what I've got here, the green line is a 5-day moving average, and the red line is a 200-day. And in the indicator window, I've got the percentage difference between these two moving averages. Now, I wouldn't recommend using the close in the 200-day. You're going to get too many whipsaws. Even using the 5-day and the 200-day, you're still going to get whipsaws. As you can see, we moved below it, moved above it, moved below it. So you can see that when we first started moving higher, well, actually, this was the continuation higher in November, December 2020. But you can see we were above 10%. 10%, the 5-day was 10% above the 200-day for a long time. But then it started turning negative, moving below. And I've got a line at plus 3% and minus 3%. And you can use that if you want to filter out whipsaws. And you can see we didn't go below minus 3% on this latest dip, but we're moving back below the 200-day because you can see we're currently 0.34%. The 5-day is below the 200-day. So that is a potential negative for the S&P 500 because bad things happen below the 200-day, not above it. So the next indicator is the ATR Trailing Stop. And I'm going to use a longer term example. You can use this for shorter term trading with a tighter stop. But in this longer term example, you can see there's a Trend Composite indicator. And it's turning bullish there in late September. And so I set the ATR Trailing Stop. And I found that you need a pretty wide stop for trend following. A 6 ATR Trailing Stop is what works pretty good. It eliminates some of those whipsaws and allows some room to wiggle and ride the trend as long as it extends. Now, the reason I'm showing KRE here is because it's one of the few equity ETFs that is still in an uptrend. A lot of commodity-related ETFs are in uptrends. XLE and the energy ETFs are in uptrends. And banking ETFs are in uptrends as well. So if I go over to the settings window here on the left, and I open that up. So here's this ATR Trailing Stop. And what you do, you put it on and you start it at the date of the signal. So you can see that this signal started on the 29th. And so what I do is you go up here and that's September 29th is the anchor date. It's 22 period ATRs and it is 6 of those 22 period ATRs below the highest close since the signal. So as prices rise here, the ATR Trailing Stop rises. And you can see as prices fall or move flat, the ATR Trailing Stop flattens. And it's based on closing prices. That's why it didn't trigger on this low. And so it's still holding. It's flattened out. It's at 68.77 right now. And then to show you another example here, we had a bullish signal in October. And so you put the ATR Trailing Stop on when that bullish signal triggered, and it rode that trend. And yeah, it got out on the low of this pullback, but you had a trend that basically extended from 39 or so to 60. So that was like a 50% advance, and then you got back in on this signal. And that's the way trend following works. You're going to get whipsaws. You're going to take losses. Maybe 60%, 55% of your trades are going to be losers, but you are going to catch a few good trends if you stick with the strategy over a period of time. Time is the key. So if you'd like to know more about trendinvestorpro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.